All right, you guys should be able to hear me now. 1, 2, 3. Illumino Pete. Still nothing, huh? What the fuck? Ah, you can hear me. Very low. Okay. Now better. All right. I'll put that shit in my mouth. Thank God. Thanks, dude. I appreciate your help again, as always. There's no volume control. Wait till I get going. I get all pissed off and I'll start fucking bitching. I'm gonna be very loud. Da, 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 da. Just adjusting some of the settings here. Just give me one more second. Hopefully you'll be able to hear me better. All right, that should be better, right? That should be a lot more louder. Okay, good. Thank you, Duncan. All right, so I try I tried to make a video fucking 2 times this morning. I posted it, couldn't hear anything. The first time, okay, the mic wasn't on, fine. I reset it, all good to go. Make the second video, I'm like, of course it's gonna work. I just said it, and it doesn't work. So fuck it, we're gonna do a live video. All right, Tesla is fucking getting crushed, and all the high flyers are getting destroyed. Okay, down 35%, 577. If you loved it at 900, you're gonna love it at 577. And this is a perfect example how, um, you know, no matter how high something goes, it's always 100% from zero, right? So 35% correction in Tesla, people are fucking eating their shorts, all right? Uh, I had a target of 850, which was about $1 trillion in market cap. It hit, went through to 900, then just fucking all hell broke loose. And now it's, uh, I think, what, 600 billion market cap, way the fuck overvalued. So as interest rates continue to rise, and I don't think they're going to go that much higher. Uh, but what's going on with oil? Oil, they're doing this commodity inflation thesis bullshit. Yesterday, OPEC came out and said, well, we're not going to increase production. Okay, but who gives a shit about production? It's all about demand. So you had all the buy the dippers, the buy and holders, and the EIAers run out and buy oil. So, as long as interest rates continue to rise, right, you're going to see oil rise. So it hit as high as 1.62 and on the 10-year. And I think, honestly, and this is not kind of analysis that you use to trade, but now that I'm a little bit more politically savvy, uh, do you think the Fed cares? You know that there'll be a little bit pullback in the market. I don't think he does because he could have easily just came out and said, look, Operation Twist. We're going to sell the short-term bonds. We're going to buy the long-term bonds and push interest rates down. Didn't do it. Market doesn't like it. Started to shed on it, and now we're going to go back to the same kind of scenario where bad news is good news and good news is good news, right? But we're still not there. We're still not there. Look at the Nasdaq. Okay, NASDAQ is getting crushed, relatively speaking. Okay, it had a nice little pop here because they were trying that bad news is good news. Didn't hold, boom, straight back down. The limp tick needs a little bit more of a correction. I think at this point we're more likely than not going to come and test the bottom support here at about 12,000. So something like this. All right. If this breaks, then the next area is going to be this long-term channel that's been in place since 2009. And if it comes back into this structure, well, you break the top, you break the bottom again. It happened back here. Okay, you break the top, break the bottom again. But that's a lot of projecting. That's a lot of we're not there yet. Let's just focus on what's going on right now. And right now, the area that it probably is looking to come down to is about 11.9, 12,000. Okay, and then we'll go from there. And let me take out these points of control. All right, they're not necessary right now. So we're below the 63-day moving average. We try to hold it here. Didn't work. And you can see it, right? You had that consolidation right in here. That didn't work. And now it's starting to give way. And, the 63-day moving average is starting to shallow out. So if it starts to inverse, then anything up against this 63-day moving average, you want to short. It's that simple. How about S&P? S&P has touched the bottom of this trend line. I think this breaks as well. Dow Jones is considered a value kind of indice, right? Because you got all those big techs, big companies. So it starts to break here. More likely than not, we're going to go Dow 27,000 or 28,000, something like that. Right, about 28,000. Okay. Big deal. That's a big deal if it does that. But again, Dow Jones is not going to fall as much as NASDAQ. And then you got the IPOs. Look at the IPO. Got crushed. All the high flyers, buy the dippers. Oh, let's make money. Down 23%. ARK. This one was a little bit of a laggard. That also got crushed. Look at that. Down 31%. SPACs is, even more so. Down 28%. Okay, so they're selling all the high flyers and all the, I'm gonna get the man bullshit meme motherfuckers. And they're gonna get ass whooped. How about the fangs? Fangs are just barely holding on to the support area. Again, below the 63-day moving average. This goes, the whole thing goes. All right, so you look at Europe. Europe, that's considered value because it really hasn't gone anywhere in 6 years. It's just been kind of sideways. It's holding up relatively better than the other ones. Same thing with the UK. It's just kind of right below the neckline. It hasn't gone anywhere since 2013. So you're talking about 8 years, and it's just kind of going sideways. Germany is still just, broke the previous highs. It's kind of going sideways, not doing much, but it's not getting crushed like the NASDAQ. That's the point. Surprisingly, Denmark is pulling back a lot. It broke the rising wedge, went to a sideways kind of mark, and then just kind of tanked. Not exactly sure why they would do that. Denmark is a good economy, relatively speaking. World Stock Market Index has broken down. Okay, but if you look at it ex-US, it's still in an uptrend. So most of the selling is happening in the US. Right? They want those. They want the 10-year interest rates to go down. They want Operation Twist. And remember, it's kind of stupid if you think about it, because the market wants Operation Twist. They want them to sell the short-term bond and buy the long-term bond. Fine, that's okay. But if you're going to push the interest rate lower in the 10 and the 30 year, then aren't you still going to have inflation, and perhaps even more so? It doesn't make fucking sense. If you're worried about inflation, you don't give a shit about where interest rates go uh, with the Fed because it's just artificially pushing it down. You're still going to have fucking inflation if that's what you believe, which I don't. But I don't know. The whole thing doesn't make fucking sense to me. Airlines pulling back again. These way the fuck ahead of themselves. Okay, this is a valid now. It's enough of a hook. So airlines are coming back down. China came down, broke the top, breaking the bottom. China's doing better than the U.S. CQQ really got its ass kicked. Had a nice run to the upside, and we bought this one, and then I sold it. Okay, and now it's down 18, 19%. We can take this out. So it will be interesting to see if this starts to break down. Okay, because if it does, then it's got a long way down to the 50s. What else? Bitcoin. I said be careful with Bitcoin because it might be making an M pattern. We'll talk about that in a minute. Look at oil. Oil right up against the long-term trend line. Okay. So I don't think it's going to go much higher. Okay. So that's it for that. Gold. Look at gold. Got crushed. Right. But this is where you want to buy gold. This is a perfect place to buy gold or add or whatever the case may be. It's a big ass bull flag. If this starts to break down, different story. Silver was supposed to do a nice cup and handle, and that thing is getting crushed, and that's breaking the support. So, again, silver, I don't like it all that much. Commodities overall, right up against the resistance area. It's still there. It hasn't broken through. So where's all that inflation? I thought they were afraid of inflation. The commodities, it's up against the resistance. It hasn't broken out yet. So I don't know. Now, the ETF commodities has broken out, all right, and it's getting really close to that previous high up here, and that was set back in 2018. Precious metals not doing anything. Base metals have pulled back a little bit, all right, still in an uptrend. Steel is right up against the previous high, not going anywhere. Palladium doing nothing. Copper. Okay, nice little pullback, double top. I don't have more data prior to 2011, but I assume this is a double top. Agriculture, right, continues to push higher. Sugar broke out, came back down, still in an uptrend. Is it a break test go? I don't know. But again, you see all the commodities, they're, either broken out or against resistance. And mostly it's in agriculture. And again, agriculture is not good because people are going to see it in the supermarket. They're going to start to freak. Wheat, not going anywhere. Soybeans, up against that previous high. Nat gas, forget about. Bitcoin, let's talk about that one. Like I said, be kind of careful. All right. Now, I was saying, you should buy down here on the hook back up. If I can move it right here. Didn't quite make it all the way to the bottom. This one hasn't yet made it towards the bottom, but if it starts to hook back up and breaks the trend line, you want to buy it. Okay, so you want something to this effect. If it breaks this area, about 50K now, then you want to look for more upside. Okay, till then, I wouldn't be touching it. And if it comes down about 42, 43, it's a buy as long as it remains above this trend line. If it starts to break, then either take profits or get the fuck out if you're doing a short term. Ethereum just kind of going sideways. If they don't scare you out, they're going to wear you out sideways. Dollar broke out. We had this one pegged. Right now it's going incredibly bullish, and that's fine. You needed to correct from this whole big ass structure. Let's see if this continues to go higher. US dollar Japan. US dollar just exploded to the upside. We identified this one as well. Euro starting to break back into the channel. Not convincingly, but it is breaking back down. Okay. Same thing with Same thing with Great Britain pound, right up against the resistance, pulling back. Needs some time to correct, and then if it starts to break out, you want to buy it. Turkish lira, ruble, skip these. USD CAD, this is going to break out. This is just waiting. It's primed for the breakout. So once it breaks, you can buy that. Australian dollar pulling back. New Zealand the same. They had nice big runs. Nice big runs from the bottom. Up 36%. That's a handsome return. Can it go higher? Absolutely. But I'm just telling you that it had a really nice run. U.S. dollar Mexican peso broke out, right? And then the dollar is rising against the one, breaking out right here. Again, this is manipulated, but whatever. We talked about the 10-year. Okay, continues to push up. Now it's up 222% since the bottom. And if you really want to get technical from the bottom, it's 354. But we'll just take this one right here. Aggregate bonds straight the fuck down, right at support. Remember, commodities are up against resistance, bonds are at support. So, you got to pay attention to these things. Again, I don't think interest rates will go much higher. I think that at some point commodities are going to start to sell off, and then slowly interest rates will start to fall, or bonds will start to rise. Okay, now I could be wrong, but you're not going to have significant inflation. In fact, this is January. I don't know where February is. But remember, when you're importing more, you're exporting dollars. So that's deflationary, right? And I don't know where the February one is. Let me see if I can find it real quick. But it increased. The deficits increased. The imports increased. Anyway, it doesn't matter. Okay, so again, I don't know how you're going to get inflation. Doesn't make sense to me. What else? Let's just go through the data here a little bit. The LEI is kind of, muddling along here for now. The world stock market index, total market cap, U.S. total market cap to GDP is starting to roll over. It was as much as almost 200%. Now it's 188. So that's starting to pull back. When you look at the jobs, because they're like, oh, it's 6.2% unemployment with 6.3, we're improving. No. The jobs are plateauing. They're flattening out here. They're not going anywhere. So where's the V-shaped recovery we've been hearing about? And markets are a forward-looking indicator, blah, blah. Garbage. February employment report, it's 6.2%, like we said, unemployment. And, when you look at it on a year-over-year change in employment, we're still way the fuck down. How about long-term unemployment? Continues to rise. It's up now to about 42 million long-term, 4.2 million long-term unemployed. Percent permanent job losses rolled over again. Okay, remember in 2007 it was far worse than it is now. But again, this is more of a slow and steady kind of deal, only because of the massive deficits. Here's a trade balance that I was talking about. Okay, I guess it is January, but historically low. So you think about 70 billion per month times 10 is 700 billion plus another 1.4. It's about $804 billion that we are exporting to the rest of the world as we import goods and services. Okay, so again, I'm not in the inflation camp. All right. Okay, let me go back here. What else? Uh, you look at cannabis, they're getting crushed after a big move to the upside. At some point, this will become a buy. Um, what else here that sticks out? DDD was another one. Big fucking correction, down 10, 11% for today. But again, look at it. It went up 1,129%. And now it has corrected about 60%. So at some point, this is going to become a buy again. Chipotle Grill down 5.5%. ACB we talked about. Who else is sticking out here for today? 14% on space. Look at that. Crushed. Crushed. Right? Double top. I posted this, in fact. Right when it did a double top, boom, look at it. How much has it fallen? Well, from the top, it's down 60%. Right? Buy the dip. Yeah, keeps on dipping, doesn't it? Travel Zoo about 7% for the day, but not really too concerned about that. It's a small stock. Baidu, somebody wanted to buy Baidu, but that's starting to uh, correct as well. Down 6% for today. All right. So again, the important thing to kind of understand right now is that value SVX versus S&P, the value has been outperforming the S&P. Okay, and it broke up incredibly bullish. So again, that's why I say when you look at the Dow, when you look at Europe, they're not really falling out of the sky, and that's because they're considered value. The high flyers are getting crushed. All right. So that's where the market is at right now. When approximately 1.9 trillion comes funding? Well, you know, when you get this 1.9, now it's kind of become a norm that you kind of expect that you're going to just keep these programs going, right? It's not like before. So you're kind of expecting that to come. Uh, how much more are they going to print? Can they do a Green New Deal if the interest rates continue to rise? No, right? They're going to have to do an Operation Twist. The Fed has to step in. Okay. Uh, so again, when you go back and you look at all the automatic stabilizers that have been implemented throughout the years, we keep having to add more automatic stabilizers. It's never enough. It's never going to be enough. Why? Because those things really don't work. Do they help? Yes. Do they work? No. You cannot create an economy, a productive economy, just because you decided to come up with some printing scheme and you put a title on top of it and it's like, okay, here it is. No, it's not the way it works. They they take something that is inevitable, something that an economy is going to recover on its own when it's ready. Prior to that happening, they come up with a bunch of fucking little things, and then say, "Oh, look, see, it's the economic auto stabilizers that made the economy recover." No, it was going to happen anyway. It's just that these auto stabilizers that you created did help some people, but it's not why the economy recovers. So you look at student loans, right? Well, we're going to forgive student loans. Is that going to recover the economy? No, it's not. Is it going to benefit some people? Sure. Are those people going to be like, oh my God, I love the government. This is wonderful. I don't have to pay for my student debt. Yes, but it's not why the economy recovers. You want to give away free housing? Go ahead. Give away free housing. It's not why the economy is going to recover. It's not. And that's the problem with MMT. That's the problem that they always make these big promises that, oh, high powered money. Well, look at Mosler. He came out. He was like, yeah, well, the high powered money, the deficits did a great job in maintaining demand. The problem is now is that borrowing is not there. So he's making excuses. It's like, wait a minute, dude. You call it high-powered money, quote unquote, high-powered money deficits because it lifts all boats, right? Because it makes everything magically better. Now you're sitting here complaining that, whoa, the borrowing is not there. What do you mean the borrowing is not? Then it's not there because the high-powered money never created enough jobs. It didn't. It didn't behave as promised. That's why fucking borrowing is not there because it doesn't work. What you're saying is garbage. Mosler is full of shit, and he's been full of fucking shit. The only thing that deficits do is pump up asset prices. That's just as clear can be. You can't make it any clearer than that, right? If deficits works, would long-term unemployment continue to rise? Fuck no, right? It wouldn't. It would start. We start to roll over, right? Look at employment. It's rolling over. It's not. It's not growing. So tell me all about your high-powered money and how wonderful it all is. And look at this, right? It's not growing. The economy is not growing, and we literally spent, I don't know, I think by now like 7 trillion in a year, something like that. And now we're going to add another 1.9, but it doesn't do it. It doesn't do it. And that's why you keep seeing GDP to debt continue to decline. You need more and more and more dollars, and you get less and less and less GDP. It's just, wishful thinking on his part. He's just making shit up and, caveats upon caveats and excuses upon excuses. This is a depression. Nobody calls it a depression because they don't want to, they don't want to tell people what reality is. But it is. It's a depression. There's a lot of people. Now, in terms of zero hedge, when he comes out and says, well, yeah, there were most bartender and waitressing jobs. It's always going to be more waitresses and bartending jobs. That's a fact. There's more of them. Number one, there's more of those jobs. Two, waitresses and bartenders are the first to go, right? In a pandemic. Everything shuts down, you're going to let them go. People that have, college educated, masters, PhDs, and so forth, those jobs don't go away in abundance. They're always the last to go. So, when you see a headline, well, the jobs added this month was mostly waitresses and bartenders. Don't fall for that stuff. It's garbage. Okay. In terms of COVID, right? Vaccines are working. We're still high relative to the summer, but they're really working. 8%, I guess, of the population is now vaccinated. So that's a good thing. That's a good thing. In terms of job losses post-World War, look at these numbers. This is horrendous. This is really bad. Where's the V-shaped recovery? Right? V-shape is supposed to be all the way up here. It's not. It's so fucking frustrating to sit here and listen to these people. Remember the China trade deal? Oh, Trump has done a great job. China trade deal. Oh, this is wonderful. Yeah, well, why are we importing more than ever? Right? Well, no, there's going to be a V-shaped recovery market as a forward-looking indicator. It's climbing a wall of worries. Right? Here we are. It's fucking March. It's a year from when the COVID started. Where's all the fucking recovery? There isn't. There isn't. And that's what I've been saying the whole time. Market went straight up, all-time highs. Right? Why? Because of deficits. Endless endless lending programs, and it's just garbage, man. It really is. Anyway, it's 11:10 in the afternoon. It's Friday. Again, we're looking for more downside, about 12,000 in the Nasdaq. That doesn't coincide with the S&P 500. Be aware of that, right? S&P has to break this support area here, which is about 3,720. Dow Jones kind of going flat for the day, okay, while the small caps are down 1.2, almost 2% for the day. Nasdaq down 1%. Right? Remember that it's value. How about the VIX? VIX is above the trend line again. Okay. Um, kind of makes you wonder, how many times they're going to break it before it really goes. Um, at least one more up. I don't know. We'll see. We'll see. SPACs are now down 8% for the day. ARC is down 8% for the day. IPO is down 6%. All those people that were running into those trades, all happy and shit. Look, mommy, I'm a fucking stock trader. They're all getting crushed. How do you help those people? You can't. Now, small caps are starting to give it up. Below the 63-day moving average, down 2%. And this one is risk off, right? Dow Jones is safe haven. So it's got about another 9% to the downside to test the previous support. Only that's wrong because the fucking trend line moved again. It's like my microphone. My microphone, I said it and then it doesn't work. All right, so it's got about 6.6% more to the downside. And then we'll see how it's going to behave then. Then we'll see how it behaves. Airlines now down 4% for the day. From the recent highs, which I was saying bullshit the whole time, is down about 9%. All right. So all the risky assets are getting trashed. All right. What else? What else? Anything else I want to talk about? Any questions, guys? Any questions? All right. All right. So anyway, the trades that you want to look for this week is the USD CAD. Look for the USD to break out. Um, Lower on the small caps, right? And if you want to protect your investment, you want to buy something stable like Coca-Cola or Hershey or some shit like that. All right. 1 second. Quickly, let's just kind of go over some of the calls that I made. And if you haven't subscribed to the TradingView, please do so. All right. I post a lot of free stuff there. All right. So let's kind of go back in time a little bit. All right. So we'll start with Tesla. Well, first of all, let's start with this. I think this is important. Uh, it's not. It's not based on. It's not based on deficits. The for the interest rates, Duncan. If they do Operation Twist, right, where they sell the short term, buy the long term bonds, then at that point you're going to get lower interest rates, right? Because it's going to be artificially. There's going to be an artificial buyer in the long term. If they don't, we already know that the 1.9 trillion is coming. So it's not going to really be affected once it passes because it's kind of like a given. Okay. The difference is that uh, it's not really going to be as impact. It's not going to have a huge impact other than just kind of sustaining what we've already been doing. That's it. Okay. So you can't make a determination is it going to be higher interest rates or lower interest rates. It's not dependent on the deficits anymore. We just kind of know it's going to be 1.9. Now, if they're going to start announcing other ones and Green New Deals and Boots New Deals and whatever the fuck, then I can guarantee you without Operation Twist, interest rates are going higher. But again, it's based on um, what the Fed does at this point. And this is what, and again, it's fucking MMT's bullshit. Again, oh, the Fed sets interest rates. Really? So why the fuck is the free market has a 30-year at 3% and the 10-year now rising to above 1.6? I thought you said interest rates were set by the Fed. I guess not. Can they be manipulated by the Fed? Answer is yes, of course. So that's why I keep saying, like, oh, QE doesn't do anything. It's just an asset swap. Really? Okay. Unleash $7.5 trillion of bonds into the open market. Tell me where interest rates go then. Because they're not going to be at zero, I'll tell you that much. They're not going to be at 1.6, that's for sure. So, well, it's just an asset swap, for a bond for a bank reserve. Really? So why are the reserves only 3.6 or whatever trillion? Where's the other 4 trillion? And I've said this a million times. Look at it. Oops, sorry. Uh, Look at it. It's 7.6 trillion. And then when you look at the bank reserves, right? This is discontinued, but it's up like 3 something. There's another one. I'm not sure where it is. There it is, 3.2. So where's the other 4? It doesn't make sense. You know, where is it? You got to find the other 4 trillion. If it's just an asset swap into reserves into the banking system, no, it doesn't work like that. That's nonsense. Doesn't pass the smell test. Sorry. Anyway, so yeah, so let's start with this one. This was back in February 22nd, and it's a rising wedge that needs to correct, right? And it has. And you know, we can really have a much deeper pullback from this structure. All right. Let's continue on here. This is Tesla. I said it looks tired. It started to break down the trend line. Okay, where is it at now? Boom, straight down. Right. So that's another good little call there. Um, Here's Tesla versus Nasdaq, and I said, okay, it's getting tired. It's up against. It's not a resistance because it's not a valid. It hasn't hooked enough. But again, Tesla is going to come down much faster than the Nasdaq, and it did. Okay, it looked very tired. The market cap was a trillion. I mean, come on, give me a break. More than Berkshire Hathaway, or that's garbage. All right, let's take a look at Jets. Okay, I said this thing is way the fuck overvalued. That worked out very nicely as well. Again, don't forget to come down and subscribe to uh, TradingView. I gave you some nice little nuggets here. Now this one, uh, again, it looked like this was a bull flag. It was going to break out. Okay, it didn't. It came back into structure. Fine. As soon as it breaks, you short it. So this is not, even though it shows like, oh look, it's red. No, it's not really red because I gave you the risk reward that if you start to pop out, you want to buy it, starts to break the longer term channel, it's going to tank. So you have to know how to read the charts. Do you expect the private sector to buy up? Well, there's an ongoing buying purchasing program right now. So the 1.9 trillion is just it doesn't make a difference. They're just what's happening is they're issuing bonds at the Fed and then they're buying bonds at the Fed. So it's a loophole. The Federal Reserve is basically funding the government, right? They're just printing money, giving it to the government, and it spends. You know, so they issue the bonds on the one hand to the open market, and then they go to the open market at a higher rate than what they issued them, and then buy them. So who's funding government? It's not the private sector. It's just the Fed. The difference now being is that more people are selling bonds, and it's dangerous. It's dangerous when people start selling bonds because once they start to sell and it starts to snowball, it can get really out of control. But I guess the Fed has confidence enough that, well, as soon as we do Operation Twist, everything's going to change. Maybe, maybe, but maybe not. And then if that starts to get out of control, then you get the snap moment, right? Where you can't keep printing. And you have to what? Keep increasing QE to infinity? You got to buy more and more every month from 120 whatever it is to 240 to 680, 480 to, at what point is that going to be counterproductive? And that's the problem with playing with these things. Now we know that the market always gets what it wants, and eventually the Fed is going to cave in. It always does. Uh, what else? So IWS small caps. Okay. Here's S&P versus value. I talked about this one, right? Value continues to outpace. Boom. There you go. All right. This is commodity index up against resistance. I kind of talked about this, and boom. It's kind of right, right at resistance. It's stalling. Um, and to me, this is good as a little diary as to what my calls are. Tips versus TLT, how much inflation is going to be right up against the resistance. It hasn't really broken out yet. Uh, Here's another one where I talk about, that you never really had, at least since 1980, uh, the 10-year rise as much as it has recently. So you had 48% back in 87, 54% in 94, 62% in 99, and then you had 95% in 2009, 115% in March of 2013, and then August of 2018 they were up about 140, right? So you see the trend is progressively increasing. And now it's up even more than 204. I think it's up 220%. So, at what point does this really start to break out and get out of control, right? That would be catastrophic. Uh, Ethereum looked bearish to me. Sure enough, that came out true. All right. Uh, what else? Dollar. We said about the dollar is going to break out. Boom, that broke out. Okay. So you guys are getting, the people who are not subscribers, you're getting some really nice little freebies here. All right. Here's copper. Okay. That worked out very nice. Gold hasn't worked out yet, but it will. We're at support here. I think it's going to move to the upside. Again, you're talking about inflation, but gold is falling. It makes no sense. Oil had okay. This is the way you trade this. You look at this chart and you say, okay, if it breaks, then you look for the downside. If it doesn't, so long as it remains within structure, the bias is to the upside. Right? It broke out to the upside. Fine. It didn't break. It didn't break. Now, the fact that I believe oil is going to go down over the course of time is a different story. But in terms of a technical perspective, and you're only trading technicals, then you wait for a break. Okay. What else? Amazon, right? Looked kind of shitty. Boom. There you go. Nice little call there as well. How about NDX? Looked like a head and shoulders. Look for more downside. Boom. Straight down. Thank you very much. And um, USD CAD has yet to develop, but I'm sure this is going to work out as well. All right. So Jets now down 6%. So it's really starting to give it up. Really starting to give it up. What's the market doing? Right. Continues. There you go. Right. So you had that false fuckery move to the upside, and then boom, straight down. Straight the fuck down. All right. So that's good. That's good for bears. So we expect for it to come down to the support area. ARC down 10% now. Woo! Oh, they're all puking it up now. IPO down 7%. SPACs down 9.56%, even lower. I have to keep readjusting this. Uh, yeah, and this IPO'd back in November or October. Okay, and now everybody has ETFs about SPACs and ARCs and IPOs, and again, they fool people into these high flyers. Hi, my name is Bob, and I'm a stock trader, and I was a sperm in 2000, and 8 years old when the great financial crisis hit. But now I can teach you how to trade because I'm an expert. Unfucking believable. Unfucking believable. And I keep making fun of these people. Uh, LEI, nothing new. I keep making fun of these people, uh, thinking somebody's gonna wake up, but they don't. They don't. I can't help them. Can't help them. It's a shame. It's a shame because I used to be that guy. I used to run around aimlessly chasing these people of what they're saying, looking at what the headlines were. Oh, what's the headline? Oh, I didn't have understanding. Anything else? Nothing really interesting. Um, just to kind of show you like the value kind of deal. Here's a nice little value. Mastercard. All right, Mastercard, Visa. Look at them. They really haven't gotten hit, right? Nor will you see something like this get hurt. Look at Hershey. It's up 3% for the day. Okay. So this is where you want to shift your money if you still want to be involved, maybe a 401k or whatever. Look at McDonald's. Okay, it's pulled back, but it's it's down zero point 0.6 for the day. GE. Okay, really nice from the bottom. Nice move from the bottom. It hasn't really collapsed. But something like Uber, on the other hand, it's down significantly. Right. General Dynamics, the War Machine, right, doing fine. I'm surprised that Domino's Pizza is falling as much as it is, but you would think this is a value play. But I did have a nice little run uh, with this COVID stuff. Bottleneck Industries, CSX, okay, train cargo. Caterpillar, this is part of the inflation. Okay, it's right up against the resistance area, starting to pull back a little bit. Um, Yum Brands, not really falling all that much. Um, yeah, Zoom got fucking its ass beaten. It got fucking crushed. Look at that. But it's still in the bull flag. I think Zoom. I think Zoom has more upside. I think this is one of the high flyers that is probably going to be a buy somewhere down here at 300. I don't think this move is over. This is different. I view this as different than space or some shit. I think this one goes. So, but look at the fucking drop, right? In about a week's time, it's down 27%. Holy fuck, right? I think what this is doing is clearly a 1, 2, 3 up, right? So this is the whole thing now is a 2. So this is the 1, this is the 2, and then you're going to have the 3. All right, so that's what I think is going to happen with Zoom. La, 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 la. Med systems. This is hospice care. Uh, this you can also view as a real estate play, okay, because they own a lot of real estate and stuff. Um, I think this continues to go higher. I hope to God it comes down to 164. I will buy a lot more of it. Okay. American Tower is starting to break down here. I thought this was going to break to the upside. It hasn't. But if this comes back into structure and breaks this red line, I think this is definitely a buy for some more upside. Boeing, I'm surprised that it's as high as it is. It's so fucking overvalued. It's not even funny. They got a lot of problems. A lot of problems. I mean, 787 has problems. The 777 has fucking problems. The 737 Max has problems. They got legal issues. They got fucking sales issues. I don't know. I'm surprised that it's as high as it is. I really am. All right, that's about it. Starbucks is one of those value things. It's doing fine. It's down 1.7% for the day. Okay. DDD is going to be a buy at some point. Just in case I didn't mention that. It's down 60% from its recent highs. Uh, Water. PHO. This one I like. Uh, it's not. It's not a high flyer, but it's a good ETF to own in a 401k long-term portfolio. All right, Bitcoin 47,000. What's it doing for today? It's kind of going sideways. Again, we want to buy Bitcoin at about 43, 44. If it breaks, then you get out. Anything else? That's about it. Any other questions, guys? TSA travel numbers still very, very weak. You cannot have an economy, a recovering economy, without fucking air travel. You cannot have it. It's not possible. But people don't understand that. V-shaped recovery. Okay. Oops. You can't see that. You cannot see that. Oh, fuck. There you go. All right. Anything else? I'll log off here. Go play my video games. Anything else? Going once, going twice, going 3 times. Duncan, don't get too caught up with this 1.9 trillion, where interest rates and so forth. Um, Again, it's baked into the cake, as they say, and also it's just it's something now that is not something new, right? It's more of a ongoing expected utility. Uh, we're probably on the second half or the second half of stimulus and so forth at this point. So the impact is not going to be the same. The impact is not the same. All right, brother. Thank you, Alessandro. Man, you're the only one that that tells me about my microphone issues. Thank God. Um, I don't know what else to fucking do. I always reset. I reset the fucking Um, and I shouldn't have to, but I keep resetting it so it can work properly, and it doesn't. It doesn't work. I don't know why it keeps dropping it out. I hit save. I do all the right things, and frustrating. All right, my homies, take care, and I'll talk to you soon. All right, bye bye. Don't forget, come down patreon.com/RealMacro and subscribe. Okay, you have three options. Don't forget to come to TradingView, and you can follow me there as well. Give you some good nuggets. All right, that's it. Take care. Talk to you soon.